Capital then to talk about the all-important IT earnings that are expected. TCS this evening and Infosys tomorrow morning. Hi Urmil, thanks for joining in on Hot Stocks. Firstly, Urmil, let's talk about TCS first. The street is really not expecting much from that company, but what's your own expectations on in terms of what we can watch out for, apart from, of course, the weakness in the US financial services, which the company has already guided?
Yeah, so for TCS, we are expecting them to maintain the QOQ growth in revenue terms as they have done in Q1. Q2 generally is a seasonally stronger quarter, so they should have seen a pickup in the growth. But because of the concerns in the BFSI segment, we expect them to report about 3% constant currency growth. To add to it, there would be a headwind of 70 bips from cross-currency movement. That's what we expect. As a result, we expect just about 50 basis point improvement in EBIT margins, which could have been upwards of 110 basis point improvement, but for the cross-currency movement. And we would watch out for their commentary specifically on the BFSI segment where they have alluded some caution. And we would also look out for how the digital services have grown for the company.
Okay, and what's the outlook when it comes to Infosys? Do you think that it will continue to do well when it comes to deal wins? And will you be watching out for growth in their digital services as well?
Yeah, so Infi does not call out digital services separately. But yes, on the deal wins, we expect that the large deal wins would be around $700 million worth TCV in this quarter. Specifically for this quarter, we expect them to do very well. We are penciling in 4.1% constant currency growth. But as they will have the impact of the RBS contract, going away, we believe that, and the second half being seasonally weak, we expect them to lower their FY17 revenue guidance by about 100 basis points. So we now expect them to guide about 9.5 to 10.5% YOY growth in constant currency terms versus 10.5 to 12% earlier.
Urmil, you have also cut the EPS estimates for tech companies for FY17 and FY18 by up to about 5.5%. Do you see a risk of further cuts or, coming, or do you expect news flows probably which will help improve the sector sentiment?
So in the preview, the cut in our earnings estimate is predominantly driven by the cross-currency movement. So GBP has appreciated by about 9% in the last quarter, and recently also it has appreciated by as much as 6%. So cross-currency movement remains monitorable, and that could impact our forecast going forward. But if we talk about the constant currency growth rate, it's only HCL Tech which we are expecting to grow upwards of 12%, benefiting from the acquisition of Volvo's external IT business. For others, we are expecting, TCS and Infosys, we are expecting about 9.6 and 10.1% kind of growth.
Okay, let you go on that note. Thanks very much for giving us a flavor as to what to expect from the all-important IT earnings. But I'm afraid we're completely out of time with news that the Nifty is just about at 86.29. We wrap it up right here on the show. Stay tuned. Bye now. Sell now in just a bit.